On today's What Do We Do podcast, we're talking about investing in 2026. So let me ask you something. Are you investing based on facts or based on headlines? Hopefully not hot takes, and hopefully not what your group chat is chasing today. Because the truth is, 2026 is looking to be very different than investing anytime in the last decade. And that certainly includes 2025. The great interest rate debate is on. There'll be more volatility with stocks. And what about AI, gold, and even crypto? Same noise, different challenges, with way less margin for error too. So today, I'm laying it out. What to invest in, what to ignore, and how to position your money so you're not just reacting, but you're making money moves. This is season 6, episode 9 of the What Do We Do podcast, my investing playbook for 2026. It's going to be a great show, so hit the subscribe button, give us a follow, and let's go. Hey everyone, welcome to What Do We Do, the podcast where we break down the complex world of finance so you can plan for and live your best life. I'm your host, Dewey Do, and I'm also the CEO and Chief Investment Officer at Great Lakes Wealth. Well, Happy New Year! We are officially into 2026 and the world is changing fast. AI is moving from hype to hiring. Interest rates are finding a new home lower, and the global map is being redrawn. So today, I'm giving you my investing playbook for 2026, and I've narrowed it down to the 5 broad categories that should be on your radar right now. Are you ready? Well, let's take some good notes, and let's get this party started. All right, well, first up in the playbook, the AI second wave. Back in 2024 and 2025, everyone was chasing the chips. They all wanted to invest in the NVIDIAs of the world. Well, for 2026, I believe the play is about the physical reality of AI. We're talking data centers, specialized cooling systems, and most importantly, what's gonna power it all? AI consumes an incredible amount of electricity. We are looking at massive revitalization of the energy grid and nuclear power. If 2025 was the year of the chips, 2026 is the year of the power. So we're gonna look at utilities and industrial companies that are literally building the house that AI lives in. At the end of the day, you can't have a digital revolution without the power to keep all the lights on. All right, my idea number 2 for 2026, the Great Rotation. For the past few years, the Magnificent Seven carried the entire stock market on its back. But as we know, trends do change. Now, only a year ago in 2025, we had 6-7, 6-7, 6-7. Or maybe it was Mag 7, Mag 7, Mag 7. Well, in 2026, I think the number to watch will be 493. Well, what does 493 mean? Well, because as the Fed continues to manage interest rates in 2026, and I believe manage them lower, we're already seeing a shift. Capital is finally flowing into the other 493 companies in the S&P 500. Get it? 493. Make sense? So this year, I'll be keeping a close eye on small cap stocks and value sectors like financials and industrials. These areas have been mostly neglected, but with lower borrowing costs and a resilient U.S. consumer, these underdogs are looking, to me, like the MVPs for 2026. Bottom line, you don't have to give up on the Mag 7, but make sure to look where the money and value is hiding too. All right, well, third in the playbook 2026 is a theme we're calling controlled disorder. Okay, let's be real. Globalization as we knew it is now over. We've moved into a world of fragmentation. With the tariff war of 2025, the current policies in DC and around the world, countries are bringing manufacturing back home. And it's what I'm calling the reshoring or friendshoring. Well, what does this mean for investing? Well, I believe it means two things. In the US, it means aerospace, defense, and domestic manufacturing are no longer just safety plays, they are now growth plays. And as nations all secure their own supply chains and boost security spending, the companies that build our planes, our chips, and our medicine right here at home are positioned for probably a multi-year tailwind. Well, the second piece is international investing. For the last decade, you could basically just buy the S&P 500 and you'd win. But in 2026, I believe the rest of the world is on sale. We are looking at emerging markets like India, Brazil, and even parts of Southeast Asia. Why? Because they have three things the US is struggling with: younger populations, lower valuations, and massive control of the critical minerals needed for the EV and AI revolution. While the US is dealing with high valuations, markets like Japan are finally seeing better corporate governance. And European value stocks are looking like a great opportunity too. Also, a weakening dollar should absolutely boost international investments in 2026. So my friends, this is the year to be a global citizen with your capital. So don't let that home bias and closed borders keep you from the next potential long-term trend. All right, idea number 4 on my list for investing in 2026 is what I'm calling fixed income 2.0. For a long time, bonds were boring, or even I used to say bonds were bad. Well, not anymore. In 2026, bonds are back, and I would say with even more opportunity than before. But here's the catch. This opportunity is built on the premise of two details. First, with public credit, you can't just set it and forget it like in the past. I believe investors will need to be somewhat active with their bonds. With inflation likely to stay a bit sticky around 3%, and the Fed's actions in 2026 technically still to be determined, investors should consider professional management to navigate the opportunities in the public bond markets. High-quality corporate bonds are offering yields we haven't seen in a decade, and there should be opportunities with tax-free and international bonds too. Well, the second piece of this puzzle are private bonds, which are more commonly known as private credit. And private credit should absolutely be considered as a fixed income option in 2026. Now, besides just an investor's risk tolerance, private credit many times has other requirements that investors need to meet, and many of these instruments are also illiquid and carry additional risks to the public bonds. So, as I often say, consult your financial professional to discuss your financial situation. And finally, number 5 on my investment playbook for 2026 list is, drumroll, private equity. But in particular, I'm looking for established revenue-generating private equity. This is sometimes referred to as growth equity. And similar to private credit, private equity is not appropriate or accessible for all investors. So again, to validate if it is appropriate and accessible for you, please reach out to a financial professional who can review and discuss your specific situation. And why private equity? Well, in this investment universe, it has been established that there are currently around 20,000 companies in total that have $100 million or more in revenue. And the same information says that approximately only 1,500 of the 20,000 are actually public. Yes, you heard me correct. There are approximately 18,500 companies out there that generate over $100 million in revenue, and you cannot invest into them in the open markets. In some regards, this is crazy. Well, we have to look at it for what it is. I believe it's an opportunity. So, said another way, over 90% of companies in the world that are established and make over $100 million a year in revenue are private. So, why would you limit yourself to just the 10% available to invest in the public markets? However, as I've mentioned in the past, investing in private equity isn't appropriate or available for everyone. There are unique risks, and the investments are typically not liquid and have many other details to them that need to be evaluated. So, again, talk with your financial professional, and if you don't have one, you can contact us at Great Lakes Wealth to have a conversation to see what might work for you. All right, there it is, folks. The 2026 Investment Playbook brought to you by What Do We Do? And Great Lakes Wealth. The top 5 investments to consider are AI infrastructure and power, small cap and value broadening, targeted domestic and international opportunities, bonds are back, but be active and be private, and private equity, established and when appropriate. With that, if your current portfolio is still stuck in 2025, it's time for a refresh. It's a new year, and that equals your time to review. And as I mentioned, if you don't have a financial professional currently in your corner, or maybe you just like to have a complimentary second opinion, then head over to our website, greatlakeswealth.us, and check us out. And you can leave us a message or give us a call to see if we can help you navigate these 5 themes in 2026. I want to say thanks for tuning in to the first episode of 2026. And as I always say to wrap up the show, live your best life, be radically generous, a great big booyah to ya, and thanks for tuning in. And I know we'll see you again soon because we're just getting started.
The opinions expressed in this program are for general information purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It's only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risks and possible loss of principal capital. Please seek advice from a licensed professional.